Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Tuesday, February 2nd, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. In Bermuda, it's 12:30 p.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. 67 years ago today in 1943, General von Paulus surrendered the German 6th Army at Stalingrad, the high water mark of the Third Reich. The news today is still dominated in the U.S. by the Toyota recalls. We'll have a little bit on that later on, and there's also ongoing reaction to the President's $3 trillion budget that was sent up to Capitol Hill yesterday. Those things typically are compiled of massive tomes of information that the legislative staff begins to go through over a period of days. So nuggets of information that are unearthed will be released during the next few weeks. And in fact, we do have one in one of our early stories, which we'll go to right now. German reinsurer Munich Re has reported a very big profit, a consolidated profit of 2.56 billion euros, or over 3.5 billion US for 2009. This compares with a gain of 1.58 billion euros in 2008. Gross premiums were up by a little under 10%. The combined ratio improved from 99.5 down to 95.3. The insurer or the reinsurer did report 500 million euros of recession-related losses, of which 200 million euros came in the fourth quarter. On the reinsurance side, premium income was up nearly 14%, up to just a shade under 25 billion euros. Analysts were expecting a fourth quarter profit of around 604 million euros and full-year earnings of about 2.4 billion euros. Instead, they came in at 780 million for the fourth quarter, and as we mentioned earlier, they came up at 2.56 billion euros for the year. So this is pretty big news for them. Also featuring in the news in regards to Munich Re is this man. Will he be known as the man who ultimately ate Munich Re? We don't know, though he's enjoying a sloppy joe there at his annual shareholder confab in Omaha. Warren Buffett, according to the London Daily Telegraph, not only owns 5.2% of Munich Re, which we reported on last week, but he actually holds more than 8% through so-called secret accounts. He's also still picking up stock on a daily basis, according to the Telegraph, and his target, according to the Telegraph, is 15%. As we mentioned last week, German securities law requires that a buyer has to disclose when he reaches the next plateau, which for Mr. Buffett would be 10%, and then he'll have to notify the market again when he reaches 15%. Hartford is in the news. Dozens of victims of last year's U.S. salmonella outbreak in the Southwest will split about $12 million as part of a settlement with the insurer of the company linked to the illness. The company linked to the illness was the Virginia-based Peanut Corporation of America, that's now bankrupt. Their insurer was Hartford Financial Services Group. Settlement will be doled out to more than 100 victims or their survivors. Lawsuits against Kellogg Company and King Nut Company are still pending. The outbreak sickened 700 people and was linked to at least 9 deaths. And in Finland, the Neste Oil Company, which is a leading supplier of renewable diesel fuel, is going to accept a $47.5 million payout from a group of international reinsurers. The Finnish company said that it had property and business interruption cover in place to cover damage and lost production volumes following a fire on a diesel production line in April of 2008 at the Porvoo refinery. They're going to book the compensation this quarter. The diesel line, which only started up in the summer of 2007, cost over €750,000 to implement, and it enables Porvoo to upgrade heavy fuel oil. And Richard Banks has a lead story in today's Insurance Day saying that international reinsurers are frantically attempting to exit multi-million-dollar contracts covering shipments of gas to Iran amid the prospects of American sanctions. Insurance Day has learned that legislation creating sanctions against reinsurers who cover shipments of gas to Iran will be signed by the President later this month. The threat of being named on the list of companies insuring the shipments is prompting attempts by reinsurers to exit contracts ahead of the introduction of the law. And those who fail to exit the contracts may face sanctions, including a ban on using credit facilities and foreign exchanges in the United States. The shipments are worth millions of dollars in premium revenue, with Lloyd's and the large continental European reinsurers providing those covers. Some commentators are saying that the biggest players in the reinsurance market are involved. Legislation, they said, aimed at insurers and reinsurers is having an effect even before it's been implemented. The dollar figure of premiums involved in covering those Iranian gas shipments is hard to pin down. However, it's believed to be substantial because as much as 40% of Iran's gas needs come in by import. And as I mentioned, the President did send his budget up to Capitol Hill yesterday, and leave it to the people in Bermuda to have spotted this. They have seen that it includes a provision more commonly known as the Congressman Neal provision that would erode the tax advantage currently enjoyed by many Bermudian reinsurers. Insurance groups with American subsidiaries which cede some of the premiums earned in the U.S. back to their parent companies in Bermuda by reinsurance will see their American tax rates rise from 2011 if this plan becomes law. Bermuda is not singled out, however, it will affect companies such as XL, ACE, and Arch. The proposal resembles the bill introduced by Congressman Richard Neal in the last Congress to amend the American tax code to impose tax on reinsurance premiums between related parties. Brad Kading at the Association of Bermuda Insurers and Reinsurers is going to issue a statement today, and we'll probably report on that tomorrow. Meanwhile, still in Bermuda, the Aon Risk Services American Executive Leadership Meeting will be held here at the Fairmont Southampton Princess Hotel from February 22nd to 24th. Joe Rigo, who's the president of Aon Bermuda, said this is a leadership conference for up to 150 of our executives in the U.S. There ultimately will be about 200 people attending. That's going to be a very big confab. I'm sure they'll all be there. Steve Case, Michael Halloran, and everybody else involved, and we wish them a good conference. Stock market in New York is up about 69 points. It had a pretty good day yesterday. We'll go to a word from our sponsors and come back with the rest of the news.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity. Protecting capital.
Engineering innovation. Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
A French court in a Paris suburb today began probing who is to blame for the Air France Concorde crash 10 years ago that killed 113 people. The trial in Pontoise, north of Paris, could last as